Let's go across to Peter McGuire. He's the Chief Market Strategist from FX Global Capital. He joins us on the currency markets. Peter, there have been a couple of developments in China that I'd like to flag off. One, that China has instructed its banks to embark on a mammoth rollover of loans to local governments. Two, there has been a cut in reserve requirement for Chinese banks. Help us understand essentially the significance and the impact of this on the currency markets. Peter, if you can hear us, are you on the line?
Yes, I am. I'm here now. Sorry.
All right. Just wanted to ask you, there have been a couple of news points from China. One, of course, China has instructed its banks to embark on a rollover of loans to local governments. There's also been a cut in reserve requirements for Chinese banks. How's all of that going to play in the currency market?
Well, good morning, Nikhil, and sorry for being a little slow off the mark there. Look, there's no doubt that China is quite aggressive in what it's trying to do and what its achievements will be this year. They need to keep growth moving forward. As Sutter just said, 9 to 10% is the forecasted rate. And I think you're going to see possibly a little bit of manipulation as far as currency, and I wouldn't be surprised to see some movement there with a little bit more, I would say probably later this year, flexibility on China's behalf as far as their currency. So, there's no doubt that they're realising that they've got to take some moves. We understand the situation in Europe and the US, and I think we could see a little bit of movement for the Chinese currency.
Peter, what about the euro? I mean, it has been strengthening against the US dollar. Now there seems to be some bit of, settlement or consolidation. What's your view on the euro, given that we have that bailout deal, which is probably going to be inked in the next couple of hours today?
Well, I think what you'll see, Nikhil, is that I would be surprised to see possibly a little bit further strengthening on the euro. It just defies logic in my belief, but we've seen a strong rally to the upside from that 127, 128 mark. It's now sitting at about 132.5. If things come across in a favourable situation as far as the IMF and the Troika is concerned with Greece, then I wouldn't be surprised to see a little bit more rally to the upside. But I don't know. Northern Europe's got their own mindset. I heard a Dutch minister overnight saying that he's not actually, he wouldn't mind if Germany, if Greece, did bail out of the euro altogether. So it's not over yet, but I think they will get a deal underway, Nikhil.
One word on where you see the euro in the short to medium term. Any specific targets you have in mind?
Unfortunately, I think you're going to see the euro probably approaching that 135 level, but I really do think that you're going to see a reverse, and I think it's going to be a very wild year for currencies. I wouldn't be surprised. We went out on a little bit of a limb and saying you'll probably see the euro close to that 112, 115 over the life of 2012, and I still hold strong to that because of the bailout and what's involved in. Greece is only the first one of the journey. I think you're going to then move very, very briskly to Portugal and, of course, Italy. So 2012 and 13 is going to be bailout territory for the IMF and the Troika. So expect some large volatility, Nikhil.